Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
So we got asked a question about what's rent prices going to do. Like, what's your prediction of rent prices? Because we've been talking about home prices, and of course, there's a lot of interest in home prices because financial institutions and people trying to make decisions, right? Okay. Well, what we did was we just grabbed data. We didn't make up the data. We grabbed data from the NAR report, and we found an article that looked at the data and made an analysis. We're going to talk about that. This is data from the end of 2021. It talks about the whole year of 2022, and so we'll just get started. So the first thing is that anytime it's a competitive market, rent prices are going to increase.
Right. Supply and demand, guys.
It's supply and demand. And so anyway, okay. So this is interesting. Even though below average rent growth continued into 2021, so think about this. Rent growth was below average prior to all of this happening. An increasing demand with rentals combined with low rental vacancy rates, which we talked about, is expected to fuel the rental housing market headed into 2022. Realtor economists predict 7.1% growth in the next 12 months, along with a much more competitive rental landscape. So anecdotally, Juana, what do you think about rental increases? What percentage of properties would you say have had a rent increase over the last year, like as stuff happens?
100%.
Pretty much all of them.
I mean, I'm not joking. It's true. I mean, even properties that were rented above market value last year, when they got to their renewal this year, they got a rent increase. Maybe they didn't get a rent increase that kept up with what properties are at today, because usually when you do a rent lease renewal, you maybe give the existing tenant a break because you don't have to face a vacancy or do any repairs to get the property going and whatnot. So to give you an example, a property whose market value is somewhere between $2,300 and $2,500 and whose rent in the previous year was $2,250, maybe would get a rent increase to maybe $2,350, $2,400. So they're still going to be in that range. They're not going to be below market value, but they're not going to be at the top either. So landlords are in this position where they're able to do that. This is just my personal experience. I had a tenant last year who pushed back on a rent increase. The rent increase last year was $100, so it wasn't that much. And he pushed back pretty hard on that. We kind of kept firm to it. He went ahead and signed begrudgingly and said, but next year I'm going. This year he had a $150 rent increase, didn't say a peep to me, just signed.
Yeah, because remember, tenants look at what they could pay somewhere else. And when they see rents going up other places, and we even have had tenants say, hey, look, we know we're going to pay more. So, how much is the rent increase going to be? Like they anticipate it.
Right.
I do have talked to like one or two people who have said, hey, you know what, they're good tenants and I don't want to raise their rent.
Right.
Right, because they've done everything great, they've been a great tenant, and I want to raise their rent, so that's personal choice.
So kind of along those lines, just to kind of finish that up, I had another tenant who I placed last year, and then this year they went ahead and signed a lease with me for another year, and then came back and said, you know what, we're paying so much in rent payments, we can buy a house for what we're renting for. Can we get out of the lease early? And we've already signed a contract to buy a house because this just doesn't make sense. So that's one of the things that's happening. Is tenants are going, you know what, I'm paying so much in rent. Yeah. Let's just go ahead and bite the bullet and buy a house.
Rent increases are certainly one of the things driving home prices higher. When it gets relatively more affordable to buy, you buy. We have more content on that coming up. One thing that was consistent throughout the data, that there will be a higher demand for rentals. Realtor.com predicts that home prices and mortgage rates will keep rising in 2022. So they are predicting mortgage rates to go up, and they're predicting home prices to go up. Increasing competitive home buying market means that those who can't compete for home will likely continue to rent, increasing the demand for rental. So bottom line is, if you are looking for housing, whether it's to purchase or rent, it's just competitive. That whole landscape is a competitive landscape. The whole thing is frothy, and
Well, the other thing that I think is really interesting is in the past, you had like the lower and kind of middle price point homes that were purchased for the purposes of having them be a rental, and that was that. But now what we're seeing is we're also seeing the the homes on the upper end and on the high end being purchased as rentals, which is really unusual. Those homes tended to be turned into rentals when owner occupants moved out, but I'm seeing them being purchased for the purpose of being a rental, which is really unusual. It's not something that was common before.
Realtor.com economists also note that those who moved in with family during the pandemic may be ready to move out and resume renting, forming a new household, adding to the demand for rental properties. We have definitely seen signs of the, we talked about this actually 2 years ago when we were making videos, when everything was locked down, talking about how people are kind of sick of living with whoever they're living with for whatever reason, whether it be their spouse at the time, their girlfriend, boyfriend, their just friend, family member, and they're looking to just go out on their own.
Right. And the other thing that we've seen is parents whose adult children lived with them during the pandemic. They've actually gone out and purchased homes for their children to get them moving on out of their home. So that's not that unusual. So again, that's taking homes off the market, and that's another buyer pool that really hasn't been talked about very much. But I think it's out there, and I think it's probably a buyer pool that is significant enough to consider.
Here's something that's very interesting. Renting could become less affordable than home buying, like Wanda was mentioning. Rent growth is predicted to outpace home sales price growth in 2022. So to answer the question, are rents going to go up? According to this NAR analysis, more than home prices.
Yeah.
And we already think home prices are going up 15%. Renting may become the less affordable option. In July of 2021, Realtor.com found that first-time home buying was more affordable than renting. So it's more affordable to rent in almost half of the nation's largest markets. In the rural markets and smaller markets, it's overwhelmingly more affordable to buy than rent. As rent prices surge, a similar trend may take hold in 2022. And we're seeing that, right?
Right. Yeah, so this is something that's actually pretty common. People think that it's rare, but it's not. I think most of the time, purchasing a home is more affordable than renting, which is why traditionally the U.S. has had such a high homeownership rate, because it just makes financial sense. It's not just because you can plant your flowers in the garden or put up your pictures on the wall. It actually makes financial sense.
And there's some government incentive.
Right.
Yeah, mortgage, tax deduction, and then the last 25 years or so, the home sale free. Renters will be looking for larger units. Rent Cafe reported that 36% of U.S. cities are building larger apartments. And in 2021, Realtor.com rental data shows that larger unit rentals have gained the most momentum towards pre-pandemic levels. We talked about this the other day. They're also becoming more luxury. So people are desiring not just that small apartment, that's just to have a place to live. They're actually looking for, because people are spending more time there. Perfect example is my son just got hired by a company. He's a software engineer. He doesn't have to go in the office every day. It's a work from home job, and a lot of companies are doing that. So when you're in your office all day and then you come home, that's fine. But when you're at home all day, you want room. Maybe you want a bedroom. That's something we see anecdotally. All these people buying homes that need the extra room for an office. They need, they have to have a room for an office at home.
Right. And, kind of to the point that I made earlier, we are seeing homes that are being purchased, that these are larger homes, more luxury homes that are being purchased for rental purposes, which goes along with what Todd just said, that rentals are getting bigger. People are requiring this extra space because they are spending more time at home than they used to, because they're spending less time in an office environment than they used to.
Landlords may rent or sell to recoup pandemic losses. Landlords were faced with limited options to offset missed rent during the pandemic because of all the things that happened, government and other things. While emergency rental assistance was implemented, it was not very well executed. So all these municipalities said, hey, we'll offset rent, you can apply for this thing, but then it was difficult. They tried to make it easy to apply, but a lot of people either didn't apply or the money wasn't, like in no city, town, state, or whatever, was all that rental assistance money deployed. Like it didn't run out anywhere.
No, it didn't. And, you know, what's happened since then is a lot of landlords are using the maximum amount allowed by law for deposits, which is 3 times rent, in order to kind of cushion themselves if something else happens and they get left out in the cold again. Because we did have landlords you know, across the country that were left out in the cold. You know, they still had to make mortgage payments, they still had to make property tax payments, they still had to make HOA payments and so on, but rent wasn't coming in. And it was really interesting because I actually called here in Las Vegas the county tax assessor, and I said, hey, you know, I understand that, you know, there are all kinds of programs out there that are deferring payments for all kinds of things. You know, for example, like the utility companies, they couldn't turn off your utilities for non-payment and that sort of thing. Are you guys, you know, waiving late charges for property taxes that are paid late? And they said, nope.
No.
So, yeah, so that was part of the issue that landlords ran into, is they did run into having to continue paying their expenses, you know, things like insurance and things like that, while they were not getting revenue in. And maybe, you know, if they had a change of fortune as far as their employment, then that put extra pressure on them.
Real estate investors will continue to benefit from the rising rental rates. Renters may be up against increasing rent prices and a more competitive rental market, but property investors are expected to see return on existing investments in 2022. Rising home prices paired with increasing rents put real estate investors in a promising position. Okay, I think that's attractive to a lot of people who are getting in the market. Certainly, Wall Street is interested in this too. May encourage some investors to add new properties to their portfolios, even as mortgage rates increase. We have a whole other video we're doing where we break down the number of properties purchased with cash and with mortgages, and then the types of mortgages and their credit scores. You are going to be blown away when we do this video. You have to, so if you want to see it, it's a video we haven't done yet, but we have all the data. So we're going to put the video together, but you have to subscribe and all that if you want to make sure you get reminded to see it. But this is investors adding new properties to portfolios.
Right. One thing that I wanted to add is because we're going to continue to have shrinking inventory, very likely, as far as the rental market, and then you're going to still have people out there with less than perfect credit who need to rent, and landlords are kind of hemmed in as far as the amount of deposits that they can charge by law. I think one of the things that you're going to see is you're going to see a premium on the rent. So let's say, for example, that the rent is advertised at $2,000 a month, but you have less than stellar credit, and the most that the landlord can charge you is $6,000 in deposits. Then maybe the landlord would say, okay, well, I'll rent to you, but the rent is going to be $2,700 a month instead of $2,000 a month, in order for them to kind of gain that cushion going forward, because your credit is less than stellar and because you are higher risk for them. And I think you're going to see a lot of that. I mean, we've seen that in the past, and it's been a much smaller amount. It's been maybe $100 or maybe $200, but I think you're going to see that amount get really big, to where it's really going to be eye-popping. So it'd be interesting to see what happens kind of a year from now as the rental inventory continues to shrink, and as people still need to rent and they have less than perfect credit.
Rising rents and low housing supply may hurt renters recovering from the pandemic. This is another thing that's pushing more people. People see this, and pushes them into the purchasing market. In contrast, renters across the country continue to struggle financially. According to Avail data, 47% of renters surveyed had missed at least one rent payment since the start of the pandemic. As emergency rental assistance programs fail to work as intended, and eviction is once again a possibility, which we frankly have had. We only had a short period in Nevada where you couldn't evict. Okay, and a lot of other places there was a short period. Some places it was longer. Renters who can't afford their rent or can't afford to pay misback rent may find themselves in a difficult position, and this is why, because they'll have to move, and then now they're stuck maybe with they have to moving expense, which is huge. Because when people say, oh, I don't want to spend another $100 a month in rent, but then you're forced to move. And now, if you have a whole household of stuff, you don't, either you either have to rent a truck, take some time out from work, and physically do it yourself. And then usually, you have to rent the other place. You're kind of paying rents in two places to move your stuff, or you have to like hire movers to move everything. So it's really difficult for every time people that are moving from place to place. If you have a small place and all your stuff will fit in the car, maybe you can just jump to the next place or whatever. But the bottom line is, rents are going to go up. Like people are asking, well, what are rents going to do? Well, they're going to go up. And rents, the only time rents really didn't go up was after the housing crash, but they didn't fall that far. They fell about $100, $150 a month median across the country, which is here we got hammered home price wise, but rents didn't fall that much. They fell about $100, $150 a month. Rents now are like almost double what they were 20 years ago in Vegas.
Well, I mean, just in the
not adjusted for inflation.
Right, just in the last year, rents in Vegas, depending on whose numbers you're using, have gone up anywhere between 23 and 27%.
Right. And remember, in Miami, they've gone up 50% in a year. Austin, Texas, they've gone up quite a bit too. Okay, those are high demand areas right now for tenants. So we have more content on all of this, obviously. We're following this super closely. The people that say, well, there's got to be, rents have got to crash because rents are too high. Well, good luck with that. I don't know about that rents crashing or whatever.
Okay, so if you're
because people are locked in, right? If you sign a year lease, that's your rent. It's not like it can crash and then 2 days later you go, oh, we're going to pay less rent because rents crashed.
Right. So here's the thing. If you think that rents are going to crash, that's fine, but tell us where that inventory is going to come from that would cause them to crash, because the only way rents would crash is with an increase in supply.
Yeah.
And I don't see the increase in supply. I mean, if we don't have an increase of supply on the buyer side, we certainly are not going to have an increase of supply on the rental side. So that's something to consider. And tenants are in this precarious position where they really don't have a whole lot of choices. They're renting for reasons as opposed to buying, and there's really nothing else for them. You are going to probably see maybe people get an extra roommate to maybe help them make ends meet or do something along those lines, and that's a possibility. But for the most part, rents are going to, at the very least, continue to keep up with inflation, if not go up significantly.
If you liked the video, please subscribe, hit the notification bell, share it with your friends. Leave us a comment. Probably a third of the videos we do are from your comments. When you say, "Hey, what about this one thing?" Or, we did a comparison of Vegas to Albuquerque because somebody asked about, could you compare Vegas to Albuquerque, like real estate markets and everything? So we did that. So, but tell us if you have something you think is interesting. We get a lot of really pointed questions about why we think the things that we think, and we think the things we think mainly because of our education and our knowledge of the past, and then our knowledge of like exactly what's going on now,
and our understanding of the way things are going to unfold moving forward. And then
we remember this: we're not like your average real estate professional maybe understands real estate really well, but maybe not broader market. And we have actually a pretty broad knowledge of all the pieces of the market, the different ecosystems, including the venture capital ecosystem, startups, like how big companies, like that whole thing, the whole economy and what's going on in business as a whole. So I think that gives us good perspective of real estate. You can't just look at real estate by itself. Real estate's obviously affected by the broader markets, and then real estate affects the broader markets too.
Right. And remember, we do these videos because we enjoy interacting with you guys, so please reward us with your comments.
Yeah.
Hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.